Hey guys, RC Peck here. Oh my God, is there a lot to talk about? But the one thing I want to talk about in this video, and I'm going to do my best to keep each video to a single topic. We'll see how that really goes. I want to talk about is the bottom in? Is the bottom in? It's kind of like this thing people just are fascinated with, to pick the bottom and talk about the bottom. You're like, well, the bottom must be in because the Fed's going to print unlimited money, right? The Fed's come out and said, we will do however much money we need to print. If we need to have a $5 trillion balance sheet, already past that, a 10 trillion, a 20 trillion, a 50 trillion, a 100 trillion, like whatever we need to do, wherever we need to throw money around, we'll do it. What's interesting, because of how popular this crisis is, this crisis seems much more popular. And I'm talking specifically the stock market. I was listening to Peter Attia, and super smart guy. He's got like 12 degrees. He's, 4 MDs, brilliant mind, super uptight, lovely human, whatever. He was talking on one of his podcasts. Now, his focus is longevity, health span. And he was talking to one of his smart friends, and he started going off in one of his podcasts about how can you just print money? How can the Fed just print money, or the Treasury just, that's going to destroy our currency? I was like, that's a conversation from a decade ago. That conversation's about a decade old. He's just getting to it. And because he's already freaking out about the pandemic, it is just accelerating his scaredness and his, I'm sure, childhood trauma. I don't know the guy. But he's just getting to the point right now in, end of March, beginning of April. Today is April 2nd as I record this. And he goes off about what's going to happen with all this money printing, right? I mean, didn't we talk about this a decade ago? And didn't we talk about how the U.S. is really a pretty special place because it prints its own money, and people seem to take that money. And, the more we see the dollar go up, the more we realize we have to print money. I mean, this is actually how it's going to work. And the dollar's going up right now. And so guess what? They have cloud cover. The Fed, the Treasury, the U.S. government. We have cloud cover to print a lot more money, and we're printing the hell out of dollars. Gold hasn't really noticed yet, right? It's going sideways. It's really fighting with that $1,600. It really looks like it wants to break higher. I mean, really, really wants to break higher. And see, there we are. Somehow I'm already on gold and printing. And I just want to talk to you guys about did we bottom? So what I want to do is I want to jump behind the computer, and I want to look at the indicators that I talked about last week, the breadth indicators. Right? Because here's the thing, the market can't bottom if stocks are in a downtrend. I don't care what is going on. And I know the Wall Street Journal came out last week and said the bottom is in, a new bull market has started. I think Morgan Stanley did too, or JP Morgan. They all really sound the same to me. They're all just big box advisors trying to get your attention. So why don't we look to stocks and see what they think? Do they think the bottom's in? Because look, the bottom cannot be in if stocks are still trending down. And so let's look to, I believe I'm going from memory, 5 indicators to see, in fact, if stocks have stopped falling and are going up. Because that's going to give us, it's almost like an x-ray view into the market to see what's going on. So let me jump behind the computer. Let's go look at those. I call them divergence indicators. Breadth indicators are what they actually are. Let's take a look at them and see what they're telling us, to see if the Wall Street Journal and JP Morgan, Morgan Stanley, whatever big box says the bottom has been put in and we're in a new bull market. Let's see what the stock market is actually saying about this. Okay, give me a second. Let me jump behind the computer and then we'll see what we got. All right, give me a second. All right, I'm behind the computer. So I want to show you what the market is telling us, right? Not the hype, not the media, regardless of whether it's coming from the Wall Street Journal, New York Times, USA Today, JP Morgan, Morgan Stanley, Goldman Sachs, fill in the blank, big box advisor, pick of the month newsletter, anyone who says the bull market has started, which That sounds like investment malpractice right there. So let's go through some of the indicators. I brought these last week, and I think I'm keeping an eye on it so you don't have to. So the first one I'm going to look at here is the New York Stock Exchange common stock new highs. So this is a chart that tracks how many of the New York Stock Exchange's stocks, because the New York Stock Exchange does not just have stocks in it. Most people don't know that. We're just looking at the stocks. And so we want the price to be above this thick black line. And I'm going to zoom in for a second, but you can see how when the market is dead, this is the S&P down here, is low, you got these lines down here below the black line, again, below the black line. You can also see they don't stay down there. So just because it pops above doesn't mean it's over. But let's just go ahead and see if it's even gotten above that. So this is a zoomed in price chart of the, I'm just going to call it the NICE for New York Stock Exchange common stock new highs. And man, that thing's flatlined. That is flatlined. Now, again, like I said before, just because, and above here's the indicator, down here is the S&P 500 with dividends reinvested. That'll be true on all the price charts. I'm using the tracking symbol SPY. So at the very least, we got to get this black line above to start to be bullish on this indicator. But it is not, and it's kind of looking dead right now on the ground. So one indicator says stay out. Now, this indicator is also with the New York Stock Exchange. It's also just its stock and nothing else, okay? And this is looking at new lows, right? So this is looking at new lows. So what we want this indicator to do is to be below the black line. We want it to be below the black line. And you can see it was below a little bit and then it popped up, which means as soon as the squiggly black line gets above the horizontal one, it means more new lows are happening. And so it popped up, it stuck its head above. So we don't want to see that above. So of the second indicator, new lows, we're increasing our new lows, and that's not a good sign. So 2 out of 2 indicators say the bottom is not in yet. One of my favorite indicators, how many stocks in the S&P 500 are above its 200-day moving average. And you want that number, whatever it is, to be above this black horizontal line. Now, again, as we zoom in, this is how many stocks as a percentage are above its 200-day moving average. And the answer right now is about 9%. About 9% of the S&P 500 stocks are above their 200-day average. Guys, this needs to get above 20. And let me be even clearer. It needs to get above and stay above. It needs to get above and stay above. Now, I know there's a lot of you going, I want to get the bottom. I want to get the bottom. Guys, look, it broke above right here. And if you look down here, because this is the S&P, you still got all this rise to the top. You still got 35% higher. So picking the bottom is dangerous. If you want to start picking the bottom when this number, 20% of S&P 500 stocks are above their 200-day moving average, that's fine, but not before. Okay, this one is the 50-day moving average. How many stocks in the S&P 500 are above their 50 days? So this will signal sooner than the 200-day. That makes sense. And here it is zoomed in. And guys, there is a little bottoming going on, and about 5% of S&P stocks are above their 50-day moving average. But guys, we need to see this get above 15%. And I get it. It looks pretty close visually, but you got to understand this is 5%. That's 15%. So it's got to go up 200%. We need 200% more stocks above their 50-day. So we need to see this get above 2 before we can even start to get bullish about it. And then advanced decline, how many stocks are advancing and how many are declining in the New York Stock Exchange? This is a super simple one, guys. This top part of the chart, again, is the indicator we're looking at, the breadth indicator, the advanced decline of all the stocks, common stocks in the New York Stock Exchange. And guys, we want to see it break above. Now, this may end up being the sidewaysness. I will be incredibly impressed if all that happens is the market fell 34%. When I say market, as you guys know, I mean the S&P. Like if that's the worst we get, man, that's going to be impressive because that's never happened before. Right? In 2008, we had a 34% fall when Lehman Brothers collapsed, but that collapse happened 60% into the market being down. We had 9/11 happen a year into that 30-month correction, crash, fall, whatever you want to call it. Even in 87, that 22% fall happened the very last day of that 2 months, right? And then you'll see the same thing through all, 40, 50, 60 plus percent corrections. So, man, it seems unlikely that all we're going to get is a 34% and that's it. But look, times are crazy and we're going to follow price because behind all these indicators, guys, is price. That's what it's looking at. They're just collectively looking at all the prices. So what we did 1, 2, 3, 4, 5. So we have 5 indicators. Guys, all 5 are saying not yet. It's very clear what these 5 breadth indicators are saying. They're still saying things are getting worked out. We know the Fed has come out and said we're going to just print whatever. They're not even giving numbers anymore, right? They're past numbers. And kudos to everyone who said a decade ago or 5 years ago, like there's going to be a point where the Fed's just going to go, yeah, we'll just print. No, we're just going to print unlimited, just unlimited, whatever the world needs. We're just going to call up the Treasury and go, yep, no, we're gonna need some more of those dollars because we're gonna go buy stuff. And they hit the corporate bond market and the municipal bond market. The problem is, you guys know we're gonna have corporate bond default, right? Then you can't buy it default. Like then that stepping in won't help. So we know the Fed's going to do anything and everything, and everyone's just allowing. There's like all this cloud cover for the Fed to just print the hell out of the dollar. But guys, the dollar's going up as this is going on, right? So we gotta follow price, not the Zero Hedge articles and whatnot. I did just hear that Zero Hedge permanently lost their right to tweet on Twitter. Interesting enough. But guys, earnings season's going to start soon. An incredible amount of cloud cover is going to come out for every publicly traded company. They're going to drag out every financial dead body they can find or think they can find. They're going to drag everything out, everything. And there's anything that can be hidden is going to be dragged out now and said it's because of the pandemic. So expect some horrific numbers. A horrific number that I just saw is unemployment. Last week, 6.6 million people applied for unemployment. The week before, it was 3.3. Holy cow. Never, ever was the 3.3. I think before that, the biggest ever was 650,000 in a week. It was something like that. We just 10x'd that last week. It'll be interesting to see next week what this week's unemployment numbers are. But oh my gosh, this is getting crazy. The fiscal stimulus package was incredibly confusing. No one knows how they're going to get their money, when they're going to get their money. And it is for sure not going to be enough. So thank you so much, guys. I wanted to make sure that you saw the indicators. All 5 of them are saying no, the bottom is not in. Could it be in? Could that, what was that day, last Monday, be the actual bottom? Statistically it could. Probabilistically it wasn't. It's just not how things work. Guys, if you find yourself interested in wanting to just be incredibly certain and have just extreme clarity on what to do, what not to do, what to avoid, know that you'll sleep well at night, know that you won't run out of money, go ahead and just, I got an outro on here. Check it out. It's super straightforward. I got this incredible ironclad guarantee. So if you do not like the experience, you get your money back right away. This is absolutely the time to make sure that you are okay and will be okay. All right, guys, this is RC Peck. This is Fearless Wealth, and I appreciate you guys being in my world, and that's just another step in helping you protect your portfolio and your future. All right, guys, bye.